Hi everyone, this is Ronak Ahuja. I welcome you all again. Today in this video, we'll be discussing the presumptive taxation scheme that is applicable to various businesses. The presumptive taxation scheme offers simpler ways to calculate profits for the businesses that satisfy certain criteria. Any business that chooses to calculate profits as per the presumptive taxation scheme gets saved from the complexities involved in calculation of profits as per the regular provisions of the Income Tax Act. So without wasting any further time, let's quickly begin. Now, before we try to understand how presumptive taxation scheme works, let's first try and understand how income taxes are generally calculated. First of all, we try to calculate incomes under the all five heads of income. That is, income from salaries, income from house property, income from business or profession, income from capital gains, and income from other sources. Once the incomes are calculated under each of the five heads, then we sum all these incomes and we arrive at the gross total income. So, the gross total income is the first step of calculation. We add all the five heads of income to arrive at the gross total income. Once the gross total income is calculated, then we reduce the deductions that are applicable to us under Chapter 6A. For example, all the payments that we make to life insurance or Mediclaim or many other deductions that are allowable under Chapter 6A, we are allowed to get it reduced from the gross total income. After deducting these, we arrive at the net taxable income. Now, the tax rates are applied to this net taxable income to calculate the overall income tax. So, the net taxable income is what we try to calculate before we apply the tax rates to it. Now, let's focus on how we calculate incomes under the head business or profession. Incomes under the head business or profession is calculated as follows. First of all, we calculate the total sales or total revenue of the business. Then we calculate the total expenses of such business, and then we identify those expenses that are allowable as deductions under the income tax provisions. Now, there are various provisions under the Income Tax Act that help us determine whether an expense is allowable or disallowable under the Act. Now, this is the most complex part in the calculation of incomes as per the business or profession. Now, all the expenses are first tested as per the provisions whether they are allowable under the Act or not. Now, only those expenses that are allowable under the Act will be reduced from the total sales. This adds to the complexity of calculation of incomes under the head business or profession that deters the small taxpayers to calculate incomes as per the normal provisions. Thus, for this purpose, the government introduced a special scheme. This scheme was called the Presumptive Taxation Scheme. Under the Presumptive Taxation Scheme, you calculate profits as a percentage of the total sales. Now, what does this mean? The first step remains the same. You'll have to calculate the total sales of your business first. And then you simply apply a percentage on those total sales, and the resultant figure will be your taxable profits under the head business or profession. Yes, it is that easy. And that's why, just to help these small taxpayers, the government introduced this scheme. Now, there are some other problems also that was being faced by the small taxpayers, and hence the PTS scheme, that is the Presumptive Taxation Scheme, was introduced. The other problem was, if your profits go below the specified limit, then in such a case, the small taxpayers were supposed to have their books of accounts audited under the Income Tax Act. That is, they were supposed to get their accounts audited as per Section 44AB, which is the provisions relating to the tax audit. If the profits fell below the specified limit, the small taxpayers were required to get their tax audit done. This added to their burden of additional cost. The second thing, as we just discussed, was the complexities involved in the calculation of incomes as per the normal provisions. Now, how do we calculate profits as per the PTS scheme? For this, we'll have to check all the sections that govern the presumptive taxation scheme, which are 44AD, 44ADA, 44AE, 44B, 44BB, 44BBA, 44BBB, and 44BBC. Now, let's quickly check each of these sections individually. Let's begin. Section 44AD. Section 44AD would be applicable to all types of businesses except a few. To name them, all the businesses that are being carried in the form of an agency business will not be allowed to opt for 44AD. Further, businesses that derive its revenue in the form of brokerage income or commission income will also not be allowed to opt for 44AD. Furthermore, all the businesses that derive revenue from goods carriage either by running them on hire or on lease as specified under Section 44AE will also not be allowed. Now, businesses having turnover exceeding 2 crores will also not be allowed to opt for 44AD. Having said that, let me specify there's an exemption to it as well. Businesses that have turnover up to rupees 3 crore will also be allowed to choose 44AD, provided the total sales that are realized in cash does not exceed 5% of the total sales collection during the financial year 24-25. This means that if the total sales that are realized in cash exceeds 5% of the entire sales collection during the financial year 24-25, then in such a case, they will not be able to opt for 44AD. Now, who are the persons who are eligible to opt for 44AD? Any individual, any HUF, or any partnership firm that does not opt for taxes to be calculated as per the tax holidays will be allowed or eligible to choose 44AD. Now, how are taxes calculated under Section 44AD? The taxable profits would be equal to 8% of the gross receipts which are realized in cash or otherwise than by an account paycheck. This means 8% of the gross receipts which are not received by an account paycheck or by way of the online clearing system set up by the banks. Now, sales that are realized in either by way of account paycheck or by the online banking system as specified by the banks, then in such a case, the taxable profits would be 6% of such gross receipts that are realized by way of account paycheck or by way of online facility set up by banks. Section 44ADA. Section 44ADA is a presumptive taxation scheme or an option that is available to specified professions. Now, the specified professions include legal profession, medical profession, engineering profession, accountancy profession, and the profession of interior designers. It would include all other professions that have been specified by the CBDT in this regard. Now, who is this applicable to? Any individual or a firm, excluding the LLPs, are eligible to opt for 44ADA. However, these taxpayers have to be a resident in India. Furthermore, there is one more condition. The gross receipts or the gross turnover of this individual or the firm should not exceed rupees 50 lakhs. Having said that, there is also an exception to this clause. Any individual or a firm having the specified profession can choose 44 ADA even if the gross receipts of such business or profession does not exceed rupees 75 lakhs, provided the total sales collection in cash does not exceed the 5% of the total sales collection. That is, the sales collection in cash must not exceed 5% of the entire sales collection during the financial year 24-25. Now, how is the taxable income calculated under 44 ADA? The taxable income would be calculated as 50% of the total receipts or the gross receipts. Moving on to section 44 AE. Section 44 AE. Section 44 AE is a presumptive taxation scheme option available to businesses that are engaged in plying, hiring, or leasing of goods carriages. Now, who is this applicable to? Section 44 AE is applicable to all the taxpayers who own up to 10 goods carriages during the year. This means if at any point of time a taxpayer holds 11 goods carriages even for one single day, then in such a case 44 AE will not be applicable. Now, how is taxable profits calculated in such case? In respect of the goods carriage, which are light vehicle, the taxable profits would be 7,500 per month or part of the month until the goods carriage is owned. This means if a light goods vehicle is owned by a taxpayer for 3 months, then in such a case the taxable profit for that goods vehicle would be 7,500 into 3 months. Now, the taxable profits in case of heavy goods vehicle would be 1,000 per ton of that heavy goods vehicle per month. Now, what does this mean? Say, for example, if a heavy goods vehicle weighs for around 4 tons and is owned by a taxpayer for like 2 months, then in such a case, the taxable profit with respect to that particular heavy goods vehicle would be 1,000 into 4 tons into 2 months. This would be its taxable profits. Now, moving on to next section. 44B. Section 44B deals with presumptive taxation option for businesses engaged in shipping business. Now, who is this applicable to? It's applicable to any non-resident that is engaged in the business of shipping. Now, how is taxable income or taxable profits calculated under this section? The taxable income or the profits would be 7.5% of the aggregate of specified amounts. Now, what are specified amounts? Let's see. Any amount that is received or receivable by the taxpayer in India or outside India towards carriage of any passenger, livestock, mail, or any goods to any Indian port. It would also include any amount that is received or receivable by a taxpayer in India for delivering or carrying any passenger, livestock, mail, or goods to any port which is not in India, that is, to any port outside India. So this was 44B. Moving on to next one. Section 44BB. Section 44BB deals with the presumptive taxation scheme option that is applicable to the businesses that are engaged in exploration of mineral oils. Now, who is this applicable to? Again, this is applicable to all the non-residents engaged in such business. The taxable income or the taxable profit in this case would be 10% of the aggregate of specified amounts. The specified amounts in this case would be any amount that is received or receivable by the taxpayer, whether in India or outside India, on account of supply of plant and machinery on hire to be used for extraction or production of mineral oils. Further, it would also include any amount that is received or receivable in India for supply of any plant and machinery on hire to be used for extraction or production of mineral oil outside India as well. Moving on to the next section. Section 44BBA. Section 44BBA deals with business of operating an aircraft. Now, whom this is applicable to? It is applicable to all the non-residents who are engaged in operating an aircraft. The taxable income or the taxable profits in this case would be 5% of the aggregate of specified amounts. The specified amounts would include any amount that is received or receivable by the taxpayer, whether in India or outside India, towards carriage of any livestock, passenger, goods, or mail from any place in India. Further, it would also include any amount that is received or receivable by the taxpayer in India towards carriage of livestock, mail, passengers, or any goods from any place outside India. So this was 44BBA. Moving on to the next one, 44BBB. Section 44BBB. Section 44BBB deals with the presumptive taxation scheme option for businesses that are engaged in civil construction for turnkey power projects. Now, who is this applicable to? This is applicable to any foreign company that is engaged in the business of civil construction or construction of any plant and machinery for the turnkey power projects. Now, what's a turnkey power project? A turnkey power project is a project in which one single entity is responsible for the entire life cycle of the power plant, including designing, construction, commissioning, and until the handover to the client. Now, what would be the taxable income or the taxable profit in this case? It would be 10% of the amount paid or payable in respect of such business. Moving on to section 44BBC. Section 44BBC. Section 44BBC deals with presumptive taxation scheme for businesses that are engaged in operating cruise ships. Who is this applicable to? This is applicable to non-residents who are engaged in operating cruise ships. Now, what would be the profits that would be applicable in this case? The taxable profits would be equal to 20% of the amount payable or paid in respect of carrying of passengers. Now, viewers, please note, this is a new section which is applicable from 1st of April 2025. This will not be applicable for the financial year 24-25. This is being shared just for your information. So, these were the provisions of the presumptive taxation scheme that was introduced by the government to ease off the burden of the small taxpayers by providing them simpler means to calculate incomes from their businesses. Now, in case you couldn't follow, please leave us a feedback in the comment section or mail us at talklevies@gmail.com. Thank you and stay tuned.